And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. What a jam-packed week we've just experienced. We're going to get into it, share with you some of the more impactful news that hit the markets this week, and there was a lot. Also take a look at where the broader markets closed, given all of the information and those top headline news. Also, are we seeing sector rotation? I'll get into that. We are certainly seeing a broadening out as it relates to breadth and participation. Also, how you can use ETFs to participate in the current strength that is taking place. And the concept here is that you can then diversify your holdings within a given group. Also, you can look at those stronger ETFs to uncover the top holdings. So we'll get into that. Also, base breakouts and new highs. Didn't think I would be saying that again for some time, but in fact, that is what is out there. So we're going to get into some of those names. Let's take a look at those headline news that really pushed the markets around this week. A little volatile going into the beginning, but certainly Wednesday's headline news was really highly anticipated. The Fed did announce that they are raising, and they did raise the Fed funds rate by 0.75%. But even more impactful were Fed Chair Powell's comments relating to that rate raise and what to be on the lookout for. We'll get into that. Also, in addition to Fed Chair Powell, Treasury Secretary Yellen came out, and they both reiterated that they did not see signs of a recession. And of course, a recession, the technical definition of that is 2 successive quarters of a negative GDP. And surprisingly, on Wednesday, we did get that GDP number come out. And I am looking for it here, but I will tell you that the Q2 GDP did, in fact, on that first estimate, come out with a negative year-over-year growth. And among other comments from Powell was the fact that we are really putting this negative number up against a super high 5.5% growth last year. So please keep that in mind. But at the end of the day, Powell's comments were very calming for the markets, and it did help boost sentiment. Consumer confidence did decline in June, but it was not overly negative. Also, we did see a move into solar stocks, and this is following the Senate's bill that is certainly on the path to being passed, and a lot of it has to do with spending a clean air bill and funding going toward these alternative energy names. Also, we did see inflation report on Friday. It posted a 40-year high. So unfortunately, inflation levels remain elevated. And in turn, the consumer spending numbers were up, but most of it was due to high inflation. So a bit of mixed numbers there, but certainly confidence is in place. As we move on, I'll share with you where we closed for the week. Also, next week, we are going to be getting another round of inflation data. Manufacturing PMI is due to be released. And certainly the most impactful next Friday is going to be that July employment numbers. So we have that technical GDP 2 successive quarters down as a definition of a recession. But the reality is there are components beneath that that are really quite telling. And this is what Powell and Yellen were referring to. One of them is employment, if we see a reduction. So we are going to be on the lookout on Friday for that July employment number. And then factory orders are due next week. So let's go ahead, take a look at where we closed on the markets. Here we are with the daily price chart of the S&P 500. Nice rally up almost 4.5%. Take a look. This is that Wednesday move on the Fed's comments, and then a subsequent nice rally. In addition to that news, we did get a number of FANG stocks that reported this week. We're going to get into that because they are certainly buoying these markets as their numbers come in, and they are not as bad as anticipated, and they are being pushed higher. So from here, we can see that the S&P 500 is moving closer to this blue 200-day simple moving average. So we have nice price action above this red 50-day simple moving average. A continuation rally will eventually push the 50-day moving average into an uptrend. And this is what we want to see as it relates to a market that can sustain the current uptrend. Going back historically to last fall, you can see this 50-day simple moving average generally in an uptrend acting as support. We are seeing the 10 and the 21-day simple moving average crossing up above that 50. That is called a golden cross, a secondary indicator, but certainly encouraging. It's what you want to see. We can see on these momentum indicators, the RSI, which had turned positive 2 weeks ago, remains above 50 and is trending higher. Stochastics, these are a faster moving momentum indicator. You want that to be above 50, which it is, and the stochastics are also trending higher. One key component this week is the fact that the advance, particularly today on Friday, very nice high volume characteristics. This is what you want to see. It is indicating accumulation investors want in, and it bodes well for a nice continuation rally. From here, we're going to take a look at some of those underlying sectors within the S&P 500. So these are the 11 sectors, and we're looking at a 2-month daily price chart view. I've gone ahead and added this relative strength indicator. I want to get a sense and understand, and you as well, of course, will want to know where that relative outperformance is so that you in turn can participate in that. So I'm going to share with you some dynamics that are taking place within the markets among these sectors. So first up, let's take a look at real estate and utilities up here in the forefront. And that may be confusing because if you look at the broader markets, the NASDAQ did outperform the S&P 500. We are seeing robust price action in a number of these growth areas. However, when you look at real estate and utilities, normally viewed as defensive, but we can see these gaps up and trending higher, all about earnings. A lot of REIT stocks and utility companies showing growth characteristics because they have been able to raise their rates, which in turn has helped them sustain their growth. So interesting to see them up here, but there is a very sound reason. Also, industrials. Let's take a look at the XLI industrial group chart. And we can see this significant move that the group had this week. It was about the third in the way of outperformance, up almost 6% for the week. And I will go ahead and share with you why and some of the dynamics, but also this is very much earnings related. So despite the fact that we did see a lot in the way of headline news, earnings reports, results, and investors' response does continue to be the primary driver. So let's go ahead and move on and take a look at some of these other areas. XLY also outperforming the broader markets. Take a look. We can see this gap up today. Now, this is interesting because consumer discretionary stocks pulled back very sharply on Tuesday after Walmart pre-announced and were discussing or actually sharing the fact that they are on the lookout for a slowdown in growth. And that in turn really hurt a number of retailers. However, they came back and then some. But today's big gap up, of course, a lot to do with Amazon. Amazon, I believe, is up. Well, we'll get into this, but certainly double digits. Tesla is having a good week as well. And then a few other areas. I believe in the breakout area, I'll share with you some stocks in the consumer discretionary. Always good to see that the consumers are still out there spending and it is counterintuitive to the concept that we are in a recession. So let's go ahead and move on. Take a look at some of these other areas. Technology did outperform this week as well. Again, a lot having to do with those couple of mega cap FANG stocks that are in here. Microsoft and Apple are the two heavyweight names in technology. They account for about 40% of this group. Other areas of strength are taking place here as well. I will review all of this in my twice weekly MEM Edge report, Sunday and Wednesday. If you haven't already, use that link below and you can trial the report for a very nominal fee. In addition to digging further behind these sectors, I also have identified stocks that are poised and have benefited from this recent rally. Last week, we had ENPH was one of only 4 stocks on the list, and it was up almost 30%. We also had a number of other winners in tech. You'll want to have access to that, so please use that link below. Let's go ahead and move on because the top performing group this week is Energy, XLE. Now, originally it was being driven because higher oil prices. However, this is another earnings play, and I do have 3 energy stocks on my watch list. I will be adding 2 of them this weekend, so you will want to get your arms around that because my MEM Edge report picked up on the rotation into energy back here on January 4th, and we did have the top performer in energy on our suggested holdings list. So let's go ahead and move on because I do want to share with you some of these areas that are lagging, and that would be communication services, a lot to do with Facebook, which is down over 5.5%, and then other areas that reported weak numbers, Snap among them. So let's move on because we want to take a look beyond these sectors at the underlying sub-industry groupings. Again, a 2-month daily price chart with that RSI indicator, all about getting a real good feel for where the current strength is given the market's broad-based rally last week. So this may be of interest to you. It's something I have been watching very closely, and it did in fact have a continuation rally this week. And this is the Dow Jones Transportation Index. And the relevance here is if we are seeing vibrancy in the transportation space, and we are, a lot of it having to do with earnings among these truckers and rails, that is oftentimes a sign of an expanding economy. But also, let's take a look. It really did get oversold. We can take a look at some of these dynamics, the momentum RSI, but now it has shifted into positive territory. So that is certainly encouraging. From here, we can take a look at some of these other areas that are outperforming. And I talked about technology. Let's take a look at semiconductors. They are having another exceptional week, up over 4% in a nice confirmed rally. And here's that dynamic I spoke of where you have that shorter term moving average crossing above the longer term, and that is your golden cross. And 2 of the stocks on my suggested holdings list. And from here, let's carry on and take a look at some of these other areas. And we're now going into areas that underperformed and take a look volatility. And this is good news. In the way of volatility, also known as the fear index, when we have that volatility rising, it is quite negative for the markets. And in assessing the markets, either confidence or fear, this 20-day, 200-day simple moving average can be really relevant. A break below that is viewed as constructive. So we're seeing a continuation as it relates to a move below that 200-day. We are now at 21. So we're getting very close to that level in that 16, 18 range that is an area for the volatility index that is indicative of a more serene uptrending market. So that is good news. So from here, I did want to go ahead and take a look at those FANG stocks and share with you where the strength is within or among those names. They were up more than the broader markets, except for Meta platform and Netflix, but the others were up. And I talked about Amazon. Let's take a look. Apple, both of these companies did report their earnings after the close on Thursday, and we can take a quick look at their charts. The Apple has broken back above its 200-day simple moving average. Nice volume characteristics. It had already been in a nice confirmed uptrend. The company did report record revenues, and we can take a look at Amazon. Also came out with good numbers. This is a nice gap up on very heavy volume. We're going to want to see where Amazon closes the day. Ideally, when you're on the lookout for a continuation rally, you want the stock to close in the upper portion of its trading range for the day. So what we can do from here is take just a minute and drill down. I don't do this too often, but get into this really super near-term view of Amazon. This is a 1 hour price chart. Here we are on that gap up. So we are still retaining that, but there are other characteristics to pay attention to as well. Let's go ahead back and take a look at some of those other mega cap names that are on that list, because again, we want to see within or among these names where that relative strength is. Take a look. Tesla's up about almost 8%, and we can see this nice move. They did come out with their numbers last week. Quite strong pullback to this 10-day and a continuation rally. Now, they are expected to benefit from that inflation bill that will be, has not passed yet, but it will be giving credits to alternative energy companies such as Tesla. So let's move on, because you want to make sure, here we are in some of these weaker names. Meta, of course, we talked about Meta Platforms and Google, but your three horsemen are up here at the forefront with those mega cap names. From here, I'm going to take us to what I'm calling an ETF tracker. This is something that I exercise on a regular basis. I have a list, a very vibrant list of ETFs that represent different industry groups. And from here, again, this 2-month candle glance view can be super helpful, not only just that chart view, but also when you add that RSI. I'm going to go ahead and update that again and share with you some of these ETFs up here at the forefront, and then also talk about why. First up here is PAVE, and this is an infrastructure ETF, and we can see, take a look at this nice downtrend reversal, double bottom, another area that really did get oversold, but is seeing a lot in the way of strength. And this is earnings related. A lot of these construction firms are coming out with good numbers. So a couple of things you can do here. We can see we've already had an extensive move. It is in an over bought position above this 70 level here with the RSI. So I wouldn't suggest that you chase it at this point. More relevant would be to go ahead to Yahoo Finance or elsewhere, and you can uncover the top holdings in that group and take a look at where they are standing relative to being oversold or overbought. So here we are. Next up is IGN, and this is a networking ETF. Same concept, super oversold, reversing that, poised to break back above that 200-day simple moving average. From here, I will share with you a couple of names in that group. CGW, this happens to be a water utility ETF, so we are seeing movement there. TAN, this is all about alternative energy stocks. So ENPH, I talked about that name on my MEM Edge report, that is up almost 30% this week. So we can see this is really different price action than the ETFs we've been viewing, because we can see that we've had this gap up on Thursday, that is prior or after ENPH reported stellar triple-digit earnings, and other names in this group as well. But we can see when you have this price gap up into a base breakout, I'll just take a second here to mark this up. Very bullish price action. Let's see if I can, well, my intent there was to really highlight this what took place here. And what did take place is that gap up out of a base, and that is very bullish. Unlike the other ETFs we've been reviewing that have been on a run, TAN does appear to poised for further upside. Super big volume. We're early in this MACD advance, so it is one that I would look into. SEDG, FSLR for solar. These are other high impact components of this ETF. I'll just share a couple of others here with you that are up here in this relative strength as it relates to exhibiting superior performance. And IYR, and I talked about that, how real estate and REIT stocks are up there. Actually, yes, IYR is real estate. And then one last area that I do name that I wanted to share with you, because there are other sub-industry groupings that are doing well. This is IAI, and it is the broker-dealer ETF. And from here, I'm going to just share with you a couple of names that are heavy components of that ETF: Morgan Stanley, Goldman Sachs. So a lot of these are moving. This, of course, is subsequent to earnings and trading higher. So last up here, I think we have a few minutes. I did want to share with you some of these base breakouts. And we can see, I'll share with you the stocks, of course, and then also some of the dynamics as to what is driving these breakouts. So here we are with T-Mobile, TMUS, gap up into a base breakout. And this is, as I stated earlier, one of the more powerful formations as relates to further potential upside. Nice high volume on that gap up, black line up through the red with that MACD. And the occurrence here is the fact that the company reported 30% year-over-year growth, 373% above estimates. But really, the big number that caught people's attention was the fact that their improved subscribership, their subscribership base has increased, which of course points to future growth characteristics, which are quite constructive. Let's take a look at, I'll share with you two more names here. This is World Wrestling Entertainment, WWE. And I wanted to point out to you, when you get these gaps up, heavy volume base breakouts, there are several occurrences that can take place subsequent to that. And what occurred here with WWE is just that. We can see it pulled back very orderly to this upward trending 10-day simple moving average, really digesting this big move. We can see outside momentum indicators are positive. The company did come out, they beat on revenues. And then also the head of the firm did retire. And there is talk that WWE may be sold. So that, of course, also helped boost shares. From here, I'm going to share with you another stock, and we can take a look. This is in the semiconductor space, and it was one of the first stocks to really emerge. It is quite a bit more constructive looking than the overall semiconductor index, and it's a dynamic that we're seeing among semis, where these smaller cap stocks are really coming into play. This is a $1.4 billion stock. It did have that nice base breakout on Wednesday on nice volume. They do provide the semiconductor chips for flat panel displays, but in a very nice confirmed uptrend. I'm going to leave it at that. Again, use that link below. You can trial my MEM Edge report for a nominal fee. Lots more I'm going to be covering over the weekend and into next week. Have a great weekend, everyone. I'll see you here next Friday.